Hello, it's MrELoans.com bringing you some information about consolidation home loans in Chula Vista, California. A consolidation home loan is a mortgage that is used to pay off existing debt such as car payments, credit card debt, home equity loans, and much more. Borrowers generally take out these types of loans to pay off high interest debt so they can get one low monthly affordable payment. These loans can be good and bad for borrowers, so they do have some pros and cons. It is extremely important for a borrower to have a plan in mind on whether they want to become debt-free, lower their monthly debt obligation, or both. A borrower should always consult a loan originator prior to taking out one of these types of loans. Now, the benefit to a consolidated home loan is that the borrower can combine all of their high interest debt and get one low monthly payment. This can create some much needed relief in a borrower's monthly budget. Many borrowers have lots of debt that nickel and dimes them every month, so this can be a great alternative. If a borrower continues to make the same monthly payment they were prior to getting the new loan, they can actually become debt-free much faster. This requires the borrower to be very disciplined when making their new monthly payments. Often, borrowers take out consolidation loans and fail to make their old monthly debt obligation payment on the new loan. Many borrowers end up using their monthly savings towards other expenses like going out to eat, vacations, and even getting into new debt. Most borrowers don't realize that they are actually extending out short-term debt and making it into long-term debt when they just make the minimum monthly payment on the new loan. For example, if a borrower has a car payment that is based off of 60 months, which is 5 years, and they roll that into a consolidation home loan that is based off of 180 months, which is 15 years, they can end up paying on their car for 10 additional years. Depending on the difference between the interest rates on the two loans, it can end up costing a borrower thousands of dollars more than their original car loan. A consolidation home loan can be somewhat hard to get these days. Many banks are not as willing to lend on these types of loans. Most banks want home borrowers to have a substantial amount of equity in their home prior to lending any money. In today's market, most banks do not want to lend a consolidation loan that exceeds 65 to 80% of the home's appraised value. This makes it very difficult for most homeowners to get one of these types of loans because most homeowners do not have that much equity in their home. So we just covered a little bit of information about what a consolidation loan is and some of the pros and cons. If you have additional questions, be sure to visit our website for more free information at www.mreloans.com.